Good morning, everybody. Welcome to the Stock Market Morning Prep video for Thursday, April the 3rd. Can't believe it's the 3rd already. Anyway, slow day yesterday. Markets kind of digest a bigger move, although we did make new intraday highs again in the S&P 500. We also did it in the transportation sector. So pretty much, what a difference a few days make, right? We had a bunch of selling come in, then all of a sudden they want to buy them again, and market participants are bidding up the market yet again. But we did have a little bit of a pause day. I'm going to show that to you in the chart segment. However, it's all about the bonds and the yen. And what's amazing to see that how bonds actually, and this is the 30-year Treasury bond future, and you could see how we rallied up. We had that risk off, right? When we get a rally in bonds, money comes out of the stock market and into bonds in these safe haven and safety sectors such as utilities and consumer staples, and of course bonds, and then of course the dollar. But we didn't see much movement in the dollar as of yet, but won't be surprised if we get movement. We're definitely going to get some sort of movement tomorrow with the non-farm payroll numbers come out. We do have ISM manufacturing today at 10. That should be a little bit of a market mover. ADP as well. However, I think that'll get digested in, and then we'll see if the market participants, traders, and investors lighten up their trading book going into tomorrow. So I do think today will be another little bit of a light day. So we're just kind of pausing around here, waiting for that event risk to happen, which would be, of course, the non-farm payroll numbers. We also have Mario Draghi speaking this morning in Europe, and that will affect the euro dollar. So if you are trading the forex currency euro dollar, make sure you want to pay attention to that. And as well, the Europeans will probably play around with the S&P. So make sure you just get a kind of a heads up of when he's speaking today. So anyway, back to the bonds, and as you can see here now, we are below the 200-day moving average. We've been so for quite some time here, pretty much half of 2013 and all of 2014 here. So next target in the bonds would be right around this area here, this pivotal low of 130.30. So if that takes that out, then obviously the low of 127.22 would be in play. And if you see that happening, I think you're going to have, this will definitely bode well for stocks, and stocks will be bid up once again. And yes, I know it's kind of crazy. We don't have a pullback here. We haven't had a decent pullback in over 3 years, at least a 10% correction. But remember, we have extreme complacency again, and you just need to be aware of that. Not to short the market. We just want to be nimble enough to say we sidestep it, we get long. Maybe for if you're a swing trader for a day or two, I wouldn't keep positions too aggressively on the long side, holding positions overnight. I'd like to see a correction so I can look to buy stocks here and bid them up pretty well. The only problem is that don't forget, we're coming into the sell in May, go away type mentality. Now, whether you believe in it or not, it usually does. We see a weaker market going into sometime in the middle to the end of April and going into May. So there could be a shock event happening. You never know. But again, I'm not saying to go out and short the market. Just make sure you're aware of that. Okay. So for me personally, I take it light. I want to make sure that we see the best quality setups until this market can really correct. And if that's not going to happen, then I'm not looking to load the boat on the long side at these lofty levels. Remember, I keep saying it, markets are fairly valued at the moment. All right, let's take a look at the Japanese yen. We had that fib cluster held pretty much all of January, February, and March, and now we broke down again. So this, again, is telling us risk on. And if you looked at the dollar yen, you'd see the inverse, and I want to show you the dollar yen because it's important. Now, this is inversely correlated, the yen spot future, okay? You can see we had this ascending triangle. We tried to break out. We failed. We have this fib cluster here that's been holding pretty much all year, and sure enough, we broke down from this ascending triangle, and we took out this pivotal low. I mean, we're right on it. So the next really confirmation of this breakdown would be a lower high. Let's assume right now would be the 8 or the 20, and then break down below, taking out this low. That'll just confirm that we have risk on. And let me just show you the U.S. dollar, the Japanese yen, dollar yen pair, and you'll see what I'm talking about here. Nice big breakout, as you can see. And this is definitely a good gauge of risk. And then what I like to do is I'll take a Fibonacci retracement from this local high to this local low, right? And then we'll just take some of these out real quick. Okay, and then you can see that the next target's going to be 104.52 to 78.6% retracement, and then of course the high of 103.43, and then really the bigger target here is going to be the 1272 Fibonacci retracement extension at 106.88. So to me, when I'm looking at risk on, risk off, and how do you play it with U.S. equities, it's really simple. You know, right now we have the dollar yen or the yen itself inversely correlated, depending on what you're looking at. But if the yen weakens, don't ask me why. This is how the market participants are taking. If the yen weakens, then dollar yen will rise, and U.S. equities will rise as well. Okay, and emerging markets. So we have a big pop up here. So now I want to look for these areas of resistance here, and if it continues to blow through, then you're going to have a risk-on trade in U.S. equities, and you need to know that as a trader. Even if you're not a currency trader, you need to know that. Okay. So anyway, let's get back to the ES. Now, I did identify a head and shoulders pattern here on the 1 hour chart. Gave targets of 1817, and I said if it triggers, you need to back test, and that's why we put triggers on each trade. So you didn't get, if you got stopped out, if you took this trade, you didn't get stopped out actually, because we had a break below, which would be right here at 1838, and that break did not happen. Actually, it happened ever so slightly, but really, you're not going to take a break that small. You're going to really, if anything, 2 or 3 or 4 candles, which would be a 2 or 3 hour trade to the downside. And what I usually do is I don't take the first trade. I always like to back test and then fail. That'll just give you that ultimate confirmation of this head and shoulders. So I'm going to wipe this out for tomorrow, tomorrow's video. So that did not happen. Obviously, you can see that we're rising much higher, and we are now in this uptrend. Well, on the hourly chart, looking very, very constructive for continued highs here, guys. I think the target is this, 1917. We have the 1272 extension, which we have blown through for the last couple of days, last couple of trading days. Let me just bring this up. Okay, and this is the ES contract. All right, this is the E-mini S&P futures contract. We have taken the 1272 extension. Now our next target would be 1917. Yes, I know it sounds crazy, but this is the target, and we do not want to fight the trend. The trend is up, and we will remain buying quality stocks that we can find intraday, and obviously we want to adhere to our trading plan as well. But this is the target, guys, on the ES 1917. Now, is it going to get there today, tomorrow? I have no idea, but that would be the target. If we start to fail, right, then we would reevaluate it and look for some downside support areas, and I'll do some fib work on the downside area. So pretty constructive, but remember, we have the major event risk tomorrow. Non-farm payrolls will pretty much dictate the trend for the month. Okay, now let's go run into some of these charts. Now, this is what I'd like to see if you have a good bias to the upside. I want to see gold rolling over, and I want to see bonds coming down. But right, that didn't happen. We had bonds actually holding true and gold running up, and then we had U.S. equities, SPY, moving up. So now we're getting that correlated, that proper correlated effect of bonds rolling down, moving lower, and of course gold moving lower too. But again, obviously things could change. News will trump the charts. All right, emerging markets here, looking very, very good. This is exactly what you want to see. Emerging markets, remember, the emerging markets sold off here, gave us that big sell-off that we had, or at least a little bit. That was the biggest sell-off I've seen in the last few years. And then, of course, that retracement, we had a little bit of a push lower, made that higher low from this previous low, and then we just exploded to the upside. So the emerging markets are telling us that it's a risk-on environment again. Okay, so keep an eye on the EEM, which is the emerging markets ETF. Very important. Okay. Now let's go into, just look at the TLT. You can see it's starting to break down again. Same thing with the ZB that I showed you. Now, spiders, very, very good. Real constructive move to the upside. We have a move up in our stochastics, MACD trying to cross over. Well, light volume, but again, not bad. We had a big breakout. We have outside days here. And now let's see if this can hold on the next pullback. The next pullback will be really pretty much put the faith in this uptrend right now. I think that if we do pull back, we still want to make that higher low. Then it'll be easy to manage. You can actually sneak in on the long side and then take this trade, making this obviously your low would be here on the swing trade. Okay, transports doing fantastic, and that's what you want to see, is the leader leading, and that is excellent. And remember, I mentioned yesterday, guys, I love the spot in UPS. Now UPS, starting to take off here, so it needs a. Remember, you don't want to just go out and buy it, but UPS on the long side on any pullbacks. FedEx, who had a little bit of an issue with their earnings a few days, well, actually about 2 weeks back, now starting to look constructive again to the upside. So keep an eye on those two. Those two trades I like a lot, as well as KSU. That's another great long trade on in the transportation sector. Russell doing okay. Put in a little bit of a doji underneath this resistance, which is now obviously resistance, which is the long-term uptrend line from the March 2012 lows. I'd like to see it get back above here. It needs to get back above here, and then we can start challenging the highs of this upper trend line resistance here. That would be the next upside target. We'll probably get this, and then of course this high, and then of course the target above. But let's see what happens here in the coming days. But I want to see this IWM start to move as well. Qs. Big cap tech starting to really, it's a mixed bag with big cap tech, between LinkedIn and Tesla moving up and down, and then you have Baidu, which got crushed several weeks back. Apple doing really not much of anything. So Qs are not doing much here. So, but I like to see a lot of this technology needs to get moving too as well, if we're going to push to new highs of 1917 in the ES. Diamond's doing great, as you can see, kind of following what the Dow transports are doing. So it is now ready to break out here. If the transports continue to break out, the Dow Jones will break out, and it could be as early as this morning. So we'll see what happens here. Okay, now we talked about some of the golden nugget trades here, and you have to watch the alternative energy. Okay, now obviously it had a pause day, but I like the KOL, which is the coal ETF. And you could find some great trades within that, but I like the fact how we're holding above the 50 to 20, the 8. We're still below the 200, but we're just double topping right now. So even if you get a little bit of a pullback, let's see if we can make a higher low here. If we can make a higher low, then I think that that the next pullback here, easy to manage. I think that it will get enough energy to build and actually come up and at least try to test that 200 day. But look at BTU. Now, this is great. I mean, this is it. Now, as you can see, how the Wall Street analysts really have no. There's no reason for even them. I don't even know what their existence is, other than to call that they had a downgrade on BTU and all the coal stocks here, and I was calling for further upside in BTU. So you had a 1 day down, and sure enough, look what happened. You see, so I mean, don't listen to the pundits. I want you to do your own homework, do your own analysis, and get a better feel for what you think is to come. These guys really have no clue at all. I mean, there's a handful of good guys, but most of them have no clue. So anyway, let's talk about okay, go here. All right, yeah, that's better. Let's talk about the XLF, the banks. Really not doing much, but you have to keep an eye on this guy right here, Morgan Stanley. I like the spot here, symmetrical triangle. We got above, well, we're still below, right at the 20. I do like the spot. I do think that if the banks can move, this will also support the rally to the upside for the target of the ES 1917 target. But watch the banks here, really important. Goldman Sachs doing quite well, as you can see here. Again, very similar pattern, right? Pattern recognition. Same thing like Morgan Stanley, but Goldman Sachs here doing quite well. And this is starting to explode to the upside. We got XLE, and now again, alternative energy. I like this on any pullback. Dial into the XLE and take a look at what you can find in the XLE ETF. I know ExxonMobil is one of the heavily weighted. And then you have XOP, which is the oil and gas. As you remember, we were looking at this somewhere back in here, and now it's starting to take out the highs again. All right, it's going to challenge the highs. I like to look back in this area, look in here, and see if you can find, get a pullback, and then look for the 2 or 3 top best. And obviously, Valero is one of them. I like Valero. The problem with Valero is that I think it needs to pull in a little bit more, but unfortunately, it's not going to if the XOP is starting to move up. Okay, take a look at TAN. Now, here's another sector I like. I've been calling this since December. I think this is going to be the big trade of 2014. At least one of the sectors will be. And as you can see here, really not doing much, but watch what happens here. See, you had TLSL. We had a big move up, and we just kind of sat there. As well as most of the market. Really didn't do much. There wasn't a big movement in the U.S. Indices yesterday, but this is all good while it's consolidating. I think it's actually holding up pretty well. Okay, let's take a look at First Solar. Now, First Solar, like I said, is definitely being accumulated. You can see this thing just pulled back about 23, 24% of this big move. And if First Solar starts to move, they're all going to move. Here's another one of my favorites I like is SUNE. This is a great, at least a challenge to the highs. Maybe they move today, so keep an eye on them today for a day trade. OYH, Oil Services, looking fantastic. Now, again, it's extended. Do we want to chase? Absolutely not. We're at the Bollinger Band here, and it needs to come in a little bit. So if this could come in a little bit, then I'm a big fan of the OYH. Schlumberger, what can you say? Literally just exploding to the upside. We need to see this pull back down into the zone area, which would be support. As you can see, let me just grab that horizontal trend line. That's going to be your new support target area right up in here. And then it's just blue skies up above. Okay, and then I think last is the XHB. Let's just run through some of the home builders. And again, 4 days up. You're not going to chase 4 days up. ITB Home Construction, breaking that bearish symmetry of lower lows and lower highs. I do like the Home Construction. The Toll Brothers, one of my favorites here. And again, if we can flag for a day or two and pull in, I think these are setting up nice for next week's trade. Okay, so that's what I'm going to be watching for next week. And lastly is Lennar, same setup, breaking bearish symmetry, breaking that downtrend channel, and now breaking back out. So if we could just flag for a day or two, maybe today, tomorrow, I think it's setting up for a big trade for next week. Hope that helps, guys. Remember, we have ADP today. We have Mario Draghi speaking in Europe, so we want to be cautious about that, about what you're trading, when you're going to trade, and then of course the non-farm payroll numbers come out. We'll have another update on tomorrow morning. Have a great day and enjoy the day, trading day today.